to the Federal Reserve Bank of St. Louis, the average sales price of homes sold in the United States as of July 2024 is $501,700. So do you think you can afford a $500,000 house? Before you sign those papers, let's break down the real numbers. You might be shocked what it actually takes to turn that dream into a reality. So let's dive right in. Fortunately, interest rates have finally started to come down thanks to cooler than expected labor market data. And there is hope that the Federal Reserve will cut rates several times before the end of 2024, which is really good news for buyers. That being said, home prices are still super high in most markets in our country. So let's go through where your budget needs to be, how much money you need to be making, and what it really costs to buy a home without being so house poor that you have shelter but no money to live on and enjoy your life. Let's start with your mortgage. There are 4 or 5 components of your mortgage payment. Think of the acronym PITI, P-I-T-I. Your principal, your interest, your taxes, in this case real estate taxes, and your insurance, your homeowners or hazard insurance. There could possibly be a 5th component, PMI or private mortgage insurance, and that simply depends on how much you're putting down. Typically, borrowers making a down payment of less than 20% will have to buy private mortgage insurance. Mortgage insurance is also typically required for FHA or USDA loans. Out of these 5 components, if you get a fixed loan, the principal and interest will remain the same throughout the length of the loan. They vary between how much of the amount is actually principal and how much is actually interest. When you first buy a house, mostly interest, and at the end of the loan, it's mostly principal, but the total amount will be the same number every month. As for your insurance and property taxes, these numbers can change from their original amount. Your property tax is based on the assessed value of your house. So if your house goes up in value, which we all want, so will your property tax. Every state has a different property tax rate, so check your state to get the most accurate number. For our example of $500,000, we're going to use 1% of the purchase price, which is the average property tax rate according to Bankrate.com. So $5,000 divided by 12 will be our monthly payment. Keep in mind that the assessed value is not always the purchase price. In fact, a lot of times it's a lot lower, which is good because remember, your property taxes are based on the assessed value. Your homeowner's insurance is based on the age of the house, the condition of the house, as well as some other characteristics, and will adjust depending on inflation and other factors such as severe weather. You can shop around for home insurance, and a lot of people bundle their home insurance with their car insurance to get a better rate. This is a really good tip to keep in mind. According to Forbes.com, the average cost for home insurance for a $500,000 house is $2,212 a year. So $2,212 divided by 12 equals $184, which is our monthly payment. Keep in mind, not all states are created equal when it comes to home insurance. Every state have different risks that impact insurance rates. For example, look what's happening in Florida. Their home insurance has skyrocketed due to all the severe weather happening there. According to Bankrate.com, the state with the lowest home insurance rates is Hawaii, and the highest is Oklahoma. So check with your state so you can get a real accurate number to put in this budget. As for mortgage insurance, or PMI, this is generally required until your loan reaches 78% of the purchase price. So if you're putting less than 20% down when you buy a house, you want to add in this number to your budget, which will vary depending on the type of loan you get and how much you're putting down. According to Freddie Mac, for a $500,000 house, the PMI will range from $119 a month for 15% down, $294 a month for 10% down, and $456 a month for 5% down. For our example, let's use $300 a month, and like I said, this will go away once you get 20% equity in your house. This will usually take around half the length of the loan, or 15 years if you're getting a 30-year fixed loan, before this goes away, unless you allocate more money to the principal each month or make an additional payment to the principal, which will also shorten your loan, which is another really good tip. So to review, so far we have $417 for your property tax, $184 for your home insurance, and $300 for your PMI. Now we need to calculate your principal and interest. We're going to use the mortgage calculator from Bankrate.com with a down payment of 5% for a 30-year fixed loan. This is a good time to remind you, I am not a lender or a financial advisor, and interest rates can vary depending on your particular situation. This is purely for educational purposes only, and I'm going to put links to all the sites I'm using to get these numbers in the description of the video. To really know your specific numbers, you need to contact a local local lender who will work with you and your particular situation and your location and give you the most accurate information. For our example, let's go over what Bankrate.com is showing us for today, September of 2024. Home price, $500,000. Down payment, 5%, so $25,000. Interest rate they're showing us is 6.75%. Principal and interest would then be $3,080.84. Let's add our other numbers. $417 for property tax, $184 for insurance, and $300 for PMI. And we get a total of $3,982 a month. Please keep in mind, these numbers are averages. Your property tax, your homeowner's insurance, and your PMI could be very different depending on where you live. Let's move on to other living costs. For this example, we're going to use the 50-30-20 budget. The idea is to divide your income into 3 categories: spending 50% on needs, 30% on wants, and 20% on savings. So the 50% on needs is stuff like housing, groceries, bills, utilities, your health insurance, car payments, and for some people, you're going to need childcare. 30% on wants is stuff like travel, entertainment, restaurants, shopping, hobbies, and 20% on savings is for retirement, investing, debt. So let's break it all down. Remember, these numbers are averages. Only you know how much you spend on each of these things. So take the list and plug in your own numbers, but let's just go with this for now. 50% a month on, well, housing, we know we've got the $3,982. Groceries, I'm gonna put $400 a month in there. Obviously, this depends on how big your family is. $400 for utilities, $350 for health insurance. This also can range widely depending on your particular situation. $300 for a car payment, $100 for gas. 30%, $200 for entertainment, $100 for a cell phone, $120 for internet and TV, and $100 for miscellaneous. And 20% would be $200 for your credit cards and $200 for a student loan. And like I said, if you have childcare, definitely put that number into this budget. This total is $6,452. Let's round to $6,450. So $6,450 times 12 equals $77,400, which is what you need to net after you pay taxes just to pay the expenses. But remember, we don't want to be house poor, and we have not allocated any money towards an emergency fund, which you should have about 3 months just in case you need it. So let's go back to your mortgage, because the rule of thumb not to be house poor is that your mortgage should not exceed 30% of your income. So to figure that out, we divide 3,982 divided by 0.30, or 30%, and that equals $13,273. So in order to live comfortably and not be house poor, you would need to bring home $13,273 a month, or $159,280 a year. Now remember, this is what you're bringing home. In order to calculate how much money you need to make, or your gross income, we need to do a little more math. In order to figure out your gross income, if we assume your net income is 75% of your gross income, we take the monthly net and we divide it by 0.75. So 13,273 divided by 0.75 equals 17,697. 17,697 times 12 equals $212,368, which is a lot of money. Now, keep in mind, this is to live comfortably and not be house poor. So I know this may seem very overwhelming, and remember, my numbers are arbitrary. So take them and adjust it to your lifestyle. Some of my numbers are gonna be too high for you. Some of them are gonna be too low for you. Like I said, I didn't include childcare, so you may have to put that in. And I did include some things that you may not wanna put in. So just take the list, take the numbers, adjust them, do the math we spoke about, and come up with your number. And not to further depress you, but it does cost money to buy a house. You got the down payment, your closing costs, inspections, appraisal, and now possibly you're gonna pay for your buyer's agent. With a $500,000 purchase price, your closing costs would be around 3%. Like I said, this will differ depending on where you live because your transfer and recordation taxes are different in each state. But general idea, closing costs would be about 3% of the purchase price. Plus we have the 5% down, and then your appraisal and your inspections will allocate $500 for each. So we've got $25,000 down payment, that's the 5%, $15,000 for closing costs, which includes all your title work and loans and all those numbers, $500 appraisal, $500 inspection, which equals $41,000. If you're paying your buyer's agent on top of that, well, that's a lot, and you can do the math. But I'm here to remind you, even in today's climate, with the recent NAR settlement rules starting, you can always ask the seller to pay your buyer's agent in the contract. It just needs to be negotiated. I did a video recently on the new NAR settlement rules, so definitely if you're not sure what's going on, check out this video next, or you can always set up a call or a Zoom with me and we can talk about it, because there are ways to have representation as a buyer and still ask the seller to pay for your agent. You don't have to go unrepresented if you can't afford your own agent. Just keep that in mind. Now, if I have totally depressed you with these numbers, shut off this video, go take a walk, have a drink, smoke a cigar, do some yoga, whatever you need to do to clear your mind. Then come back, rewatch the parts where we go over the numbers, plug in your specific lifestyle numbers that only you know, and then speak to a local lender and get the real numbers for your particular loan. Because remember, I am not a lender nor a financial advisor. I just think that these videos that I make on different budgets can be a helpful guideline for you if you really don't want to know if you can afford to buy a house and not be house poor and live comfortably. I hope you found it helpful. It is for educational purposes only, because everyone's situation is specific to them. If you want to see the numbers for a $400,000 house or an $800,000 house, check out one of these two videos next. Thanks for watching. I do appreciate it. Bye.